Hello, my dear students. Hope you guys are all doing good. Hope you guys are all perfectly fine. So in this video, I'm going to quickly cover the MTP series, whatever MTPs that have been released for JAN 2025 attempt, two series of MTPs they have released. Yes, there are a few questions. There are a few things which are a little bit tricky here. And as I always say, the most important resource which you have to compulsorily refer before you go for the examination is RTPs and MTPs. RTP video has already been uploaded. So now I'm going to do the MTPs also. If you have already done it, well and good. If you have not yet done it, please do it now. Don't directly watch my video. Try to do this MTPs once. If at all any MCQ explanation you are not able to get it, if at all any descriptive question explanation you are not able to get it, then only please refer to this video. So MTPs, try to do it on your own. If at all you are getting stuck somewhere, then come and watch this video. Okay, so having said that, I will try to quickly wind up as early as I could, at the same time trying to make sure that nothing important is going to be missed out. So first I will be starting with series 1 MTP. So first as usual, we'll start with the case scenarios. So here they have given a few case scenarios. Let us try to get to know the facts of these case scenarios. Case scenario number 1, while auditing A&J Industries Private Limited, CAJ has decided that it would be appropriate to examine 100% of the items comprising turnover of 30 crore rupees as reflected in its financial statements. So auditor thought he will do examination. He will do 100% examination of that turnover, which is of 30 crores. Might be he might have some sort of understanding. There might be risk might be very high. That's why he might thought of doing 100% verification. So whatever it is, when it comes to the sales, he decided that he will try to verify 100% of the transactions. In this regard, he has designed the test of details for transactions forming part of company's turnover. The sales function is automated in the company's information system, involving repetitive nature of calculations. So whatever sales the company is doing, that they have automated it. Further, in respect of designing of test of controls pertaining to turnover, he is in a fix. He is in a fix. See here, sometimes they will try to test your English vocabulary as well. He is in a fix means he is in a dilemma. How to perform test of controls, he is in a dilemma. For test of details, he is having a clarity. He wanted to do the test of details. But what he has to do regarding test of controls, he is in a dilemma. He is in a fix means he is in a dilemma. Okay, next. While verifying turnover of the company, CAJ ensures that all the sales have been correctly recorded in the books of accounts on the basis of invoice, and also discounts have been properly adjusted. So all the sales are recorded at correct amounts or not, discounts are properly adjusted or not, that he is trying to verify. Similarly, in respect of verification of employee benefit expenses reflected in the financial statements, he ensured that TDS related adjustments are also correctly reconciled. Basically, when it comes to sales and also when it comes to employee benefit expenses, he wants to make sure that the amounts at which these expenses are shown, they are correct. That means he's trying to obtain audit evidence regarding measurement. Sales is also a P&L item, and employee benefit expense is also a P&L item. So he's trying to obtain evidence whether these figures are accurate or not. That means he's concerned about measurement assertion. Next, Ankush is an article assistant who has recently joined CAJ for practical training. He is also a part of the team assisting seniors. Although he has read about assertions, there remains several doubts about assertions in his mind. He noted down the following points about assertions as per his understanding. What are they? Assertions are the representations made by auditor. No, they are the representations made by management. Assertions are generally explicit and not implied. This is also incorrect. Why? Because assertions could be explicit, or even it could be implicit. There is no requirement that assertions always has to be expressed. Verification of the assertions helps the auditor in finding out whether financial statements are in accordance with the applicable financial reporting framework or not. Yes, this is correct. If you verify assertion, you will get to know whether the financial statements are prepared as per applicable financial reporting framework. So this article assistant is having 3 kind of observations. Out of that, 1 and 2 are wrong. Third one was only correct. In normal course of business, the company also holds a part of goods as a consignee. So they are also holding the goods as a consignee on behalf of, that means here the client is a third party. By verifying assertions relating to inventories, he ensures that inventory held by the company as consignee of goods on behalf of third parties is excluded from its inventories. So the client company is a consignee. So that means on behalf of the consignor, they are holding the goods. So these goods should not form part of inventory of my client company, because they will go to the inventory of the consignor. So by verifying this, what he's trying to do, he's trying to verify whether all the inventory which belongs to the company has been properly reflected or not, And also those inventories which doesn't belong to the client should be excluded. It should not form part of the books of accounts of the client. That means he's trying to verify rights also, whether company is the owner of that inventory or not. If you are a consignee, your client is not the owner. Someone else is the owner of that goods. So that means you are trying to verify completeness assertion as well as rights and obligations assertion. Okay, next. Having said that, let us come to the next part. So on the basis of this background discussion, let us try to have a look at the questions now. So based on the above facts, answer the following. What are they? Considering approach of CAJ in respect of test of details and test of controls pertaining to sales, which of the following statement is most appropriate? See, as we have seen in the first thing itself, he wanted to verify 100% of the sales. That means he's having a clear plan for test of details. But when it comes to test of controls, he doesn't have a clarity at all. So regarding this, they are asking you to give some comment. Let us see. The approach for both designing test of details and test of controls is proper. Why? Because when it comes to controls, it doesn't have anything. No. Is it proper? No. The approach for designing test of details is proper. He is having a proper approach for test of details. However, it is an unlikely approach for test of controls. When it comes to test of controls, is in a dilemma completely. So that's why this is a correct option. So designing test of details is perfect only, but not verifying internal controls is not a good thing. The approach for designing test of controls is proper. No, it is improper. The approach for designing test of details as well as test of controls is not proper. No, for test of details, it is okay. For test of controls, it is inappropriate. So option should be B. So as you could see here, even if you cross verify with the key, his answer has been given as B. Next. Which assertions are being verified by CAJ for correctness of recording of the sales on the basis of invoice and TDS adjustments for employee benefit expenses? This we have written at the respective explanation itself. In both the cases, he is trying to verify measurement. Both are P&L items. He is trying to verify the measurement assertion. So if you cross verify with the key, 2 is A. Now coming to the third question. Considering the view of Ankush, which of the following is false? Ankush is an article assistant. He is having 3 comments regarding assertion. Which of that are correct? 1 and 2 are incorrect. Third one is only correct. So which of the following is false? Which statements are false? 1 and 2 are false. So that also we have explained at the respective place itself. As regards the matter of holding of certain inventories, as consignee of the goods, which type of assertions are being verified by the auditor? This also we have written at the respective place itself. He's trying to obtain evidence regarding completeness as well as rights and obligation. So he's trying to obtain evidence regarding both. So the key is also here B. Next. So this is case scenario number 1. Now let us try to have a look at case scenario number 2. Revant, Manohar and Piyush are planning to set up a new business for trading of electronic goods. Okay. They have heard in business circles that many entrepreneurs are setting up their organizations as LLP. However, they lack knowledge about such legal structure. So they decided to approach a CAS for understanding the difference between partnership firm, an LLP and a private company. Clear? Nothing specific here for you to understand. They also want to gain the knowledge of the legal provisions regarding number of partners, paperwork involved in forming an LLP. Further, they also have doubts regarding maintenance of books of accounts and the audit requirements for such organization. Revant, being cost conscious, specifically asks CAS regarding requirement of audit of LLPs. So what is the requirement for audit of LLPs? Either turnover exceeding 40 crore rupees or contribution exceeds 25 lakh rupees. If any of this criteria has been met, then audit will become applicable for LLPs. During the discussion, he shares that they are expecting a turnover of 5 crores in the first year of their business and funds amounting to 50 lakh rupees would be brought by the partners. See, both the criteria has exceeded. Turnover criteria has also been exceeded. Capital contribution has also been exceeded. So will audit become applicable for them? Yes, 100% applicable for them. Manohar is concerned about the rules regarding the maintenance of accounts in software with the audit trail future. He has a vague understanding gained through social media that such rules have recently come into effect. As we all know, audit trail has been made mandatory for companies. Moreover, he believes that these features are only useful for auditors. See, if you have audit trail, will it be useful only for auditor? No. If you have an audit trail, even the entity also will get benefited out of it. To address his concerns, CAS attempts to explain these matters to him. Okay. After resolving their doubts, they decided to constitute an LLP named Blitz Products LLP with the professional assistance of CAS, who helped them in completing the necessary paper formalities. And after constituting an LLP, they acquired dealerships of few reputed companies and received a good response from the market due to prominent locations of their showroom and are confident of achieving their turnover expectation within the first year of business. So their turnover criteria is getting met. They plan to get their accounts audited after closure of the financial year. So if you remember from the audit of different types of entities, first auditor of the LLP should be appointed at any point of time before the closure of financial year, which means on or before March 31st, 2024, they should have appointed whom? They should have appointed the auditor, but they decided after the closure of the financial year. The finance and accounts function of business is being headed by Piyush, and he plans to contact him somewhere around August after the closure of the financial year. They are contacting the auditor, but LLP rules says auditor should be appointed at any point of time before the end of the relevant financial year. First auditor. If it is subsequent auditor, 30 days prior to the end of the financial year. For getting audit of financial statements conducted, filing income tax return, and making necessary compliances. Now, on the basis of this above facts, they are asking us a few questions. Which of the following is correct regarding the difference in types of organizational structure and connected matters? Option A, LLP gives the benefit of flexibility of limited liability of a partnership and good governance of a company. So it is telling they are enjoying a benefit of limited liability. Yes, it is not a flexibility actually. Flexibility of partnership is there. See, what is LLP? LLP will have benefit of limited liability. Okay. Good governance of a company. And also flexibility of partnership. Benefit of limited liability, good governance, and flexibility of partnership. In the partnership, you can be very flexible. You need not follow strict rules and regulations. Yes or no? So here they are telling benefit of flexibility of limited liability. No, they enjoy benefit of limited liability, flexibility of partnership firm. Option B, LLP gives a benefit of limited liability. Yes. Flexibility of partnership. Yes. A minimum of 2 individuals are required to form an LLP, and at least 2 partners are required to take deep in. The regulatory authority in the case of LLPs is ROC. Yes. Not register of firms. In case of LLPs, the regulating authority is ROC. Yes, this option looks fine. LLP gives the benefit of limited liability of a company and flexibility of partnership. A minimum of 2 individuals are required to form a LLP. Everything is correct here. Required to form an LLP, and at least 2 partners are required to take DIN, not DIN. Company directors are required to take DIN, whereas LLP partners are required to take deep in. The regulatory authority in the case of LLP is Register of Companies. So one thing is wrong here. LLP gives the benefit of limited liability of a company, flexibility of partnership. A minimum of 3 individuals are required. No 2 individuals will be enough. And at least, so this is also wrong. So correct option is option number B. Okay. So if you cross verify with the key, yes, 5th one is B. Next one. Which advice would have been provided by CAS to Revant regarding audit of financial statements of LLP, considering description provided in the case? So they are asking audit provisions, when audit will become applicable. There is no provision for compulsory audit. No, there is provision for compulsory audit. Every LLP, no, there are exceptions also. There exist provisions under the LLP Act and relevant rules for audit of LLPs based on twin criteria of turnover and contribution thresholds. However, the proposed business doesn't meet the thresholds and would not be required to get its accounts audited. No, they are required to get its accounts audited because the turnover criteria has been met, and both the criteria has been met actually. There exists a provision under the LLP Act 2008 and relevant rules for audit of LLPs based on twin criteria of turnover and contribution. The proposed business meets the thresholds and would be required to get its accounts audited. This is correct. Next, which of the following statement is correct regarding Manohar's point of view? They have a point of view regarding audit trail, no? What is that? Out of that, which view is correct? Audit trails are useful only for auditors. Not audit trail is useful even for the client also. Audit trails are useful for businesses as well as auditors. However, maintenance of accounts and software having feature of audit trail is not compulsory for LLPs. Yes, it is compulsory only for companies, not LLPs. This option looks fine. Audit trails are useful for businesses as well as auditors. Maintenance of accounts and software having feature of audit trail is compulsory. It is not compulsory for LLPs now. Audit trails were used for businesses as well as auditors. Maintenance of accounts and software having feature of audit trail is compulsory for LLP having turnover. No, it is not at all compulsory for LLPs. So option B is the correct option. Next one. Which of the following statement is correct regarding Piyush plan? So they are appointing the auditor, no, after the closure of the financial year. Is it correct? No. Since it is the first year, auditor has to be appointed on or before 31st of March. So auditor is required to be appointed at least 30 days prior to March 31st. No, he's not a first audit. He's a first auditor. He can be appointed at any point of time before 31st of March, not 30 days prior to the 31st of March. Auditor is required to be appointed at least 60 days. No. Auditor is required to be appointed at any time before 31st of March. Therefore, Piyush's plan to approach CAS is not in accordance with relevant rules and regulations. Yes, this is correct. So 8th one is C. Next. Considering Piyush plan to contact CAS in August of 2024 for making necessary regulatory compliances could lead to. See, they are required to conduct the audit, but they are actually appointing the auditor in August of 2024. Because of this, what non-compliances could happen? Number one, we all know LLPs are required to submit annual return within 60 days from the end of the financial year. So if annual return has to be submitted, audit has to happen. 60 days from the end of the financial year will end by the end of May itself. So if the companies are trying to appoint the auditor in August of 2024, by then they would have already exceeded the due date of filing of annual return, which has to be filed within 60 days from the end of the financial year. There is another form, statements of accounts and solvency. They say within expiry of 6 months, there is a lot of time for statements of accounts and solvency. But however, even after August of 2024 also they can file. Which one? Statements of accounts and solvency. But for annual return, the due date is within 60 days from the end of the relevant financial year. So if they approach the auditor in August of 2024, they would default in filing annual return. However, they will not default in filing statement of accounts and solvency. Even after August of 2024 also, there is still time left for filing of statement of account and solvency. So option A is going to be the correct option. So we have one more case scenario here. Let us have a look at that as well. Vama and Associates were appointed as auditors for Royal Constructions Limited for the financial year 2023-24. During the audit, the auditors observed a significant amount of work in progress inventory. Instead of attending the physical inventory count, they relied on alternative procedures. These included reviewing production reports, reconciling them with recorded inventory levels, and analyzing various attempts to assess the accuracy of the work in progress balance. Okay. The auditor also noticed that company has obsolete inventory of 1,75,000, which has an estimated realizable value of only 50,000, and the company has valued it at its cost in financial statements. Is it correct? No. Cost or NRV, whichever is lower. So here it is clearly realizable value is lower. They have to value it at 50,000 rupees. Next. During the review of PPE, the audit team noted that the company included 1,05,000 for employee benefit expenses relating to the acquisition of PPE. So expenses directly related to PPE, employee benefit expenses are 1,05,000. They should be capitalized. And 1,25,000 for testing the functionality of the equipment. So for testing, they have spent 1,25,000. But from that testing, they are able to sell that output for 35,000. It has to be reduced. So if you reduce that 1,25,000 if you reduce that 35,000 from 1,25,000, it will come to somewhere around 90,000 rupees. So what is the total capitalization value of PPE? So 1,95,000 rupees. This much value they have to capitalize. See, this is from the accounting standards. Next, Vama and Associates derive a significant portion of their income from Royal Constructions Limited. Auditors are going to derive majority of their income from one client only, which is amounting to 10 lakh, which is representing 65% of their total revenue. In audit firms' total revenue, 65% of the fees is coming only from one client. They are excessively relying on the client for their revenue. This will be a self-interest threat. This will be what? Self-interest threat. Despite finding financial discrepancies of 3 lakh rupees in the company's accounts, the partners decided to overlook these issues to maintain their lucrative relationship. Because of that self-interest threat, even though they found the deficiencies, they are not reporting it. Now, based on the above facts, we have to answer a few things. Let us see what are they. Royal Constructions Limited should value the obsolete inventory at what value? At 50,000 rupees. This we have already answered. So 10A. Next one. What amount should be included in the cost of PPE in the financial statements of Royal Constructions Limited? This is also 1,95,000. This also we have calculated 1,95,000. Next, what potential threat to the independencies? I have already clarified. It is going to be a self-interest threat. So 12th one is also A. It will be a self-interest threat. Next, we have a few general MCQs. Let us try to address that as well. RJ and Associates Chartered Accountants has been auditing the books of GP Resorts Private Limited for the past 2 years. Okay. GP Resorts Private Limited has experienced a significant increase in the visitors due to a successful marketing campaign. This increase in the number of visitors has prompted the resort to introduce new services. There were new services added to the client in the current year. From the last 2 years, you have been conducting the audit of the same client, but in the current year, they have added new business, new product line they have added, such as event hosting, which contribute to higher revenue. Whether RJ and Associates should issue a revised engagement letter? Yes. Even though it is a recurring audit engagement, but since there is a change in the nature of activities which the client is doing, it is highly advisable to give an engagement letter once again. Clear? So the answer, first option, they're telling no, it is not a correct option. Yes, the auditor is required to issue a new engagement letter for each period, not for each period. Here there is a change, that's why we are issuing. Yes, a new engagement letter is required due to significant changes in the nature and size in the business of the GP Resorts Private Limited. This is the correct option. Option D, they are telling no, which is not the correct option. Now, coming to the next question. TAD and Associates, a sole proprietor firm of Agamya, is offered appointment as auditor of a company engaged in manufacturing of automobile components for the first time. First time, initial audit engagement. She is checking the facts about integrity of the promoters of the company and key managerial persons. So what she is doing? When you are checking integrity of the promoters, KMP, what she is trying to do? Preliminary engagement activity she is trying to do. So matters such as competence of staff to perform the engagement are also considered. This is also one of the preliminary engagement activity. The appointment is subsequently accepted by her. What is CA Agamya trying to do by checking such facts? So she is trying to actually perform preliminary engagement activities. Next. A practicing chartered accountant has been engaged by a company to perform certain procedures relating to its trade payables. Such agreed upon procedures. When I say agreed upon procedures, what should immediately strike? SRS, standards on related services, which will become applicable whenever you are performing agreed upon procedures. Agreed upon procedures, including verification of purchase from related parties and sending confirmation letters and reporting factual discrepancies to the management of the company. Which of the following statements is correct in this context? Option A, the practicing CA shall perform work in accordance with SRS and also standards on audit not required. SA doesn't become applicable here. The practicing CA shall perform the work in accordance with SRS and he has to maintain quality control. So that's why he has to follow SQC1 also. SQC1 will become applicable for all forms of engagement. So yes, he has to do SRS and also SQC. The practicing CA shall perform work in accordance with standards on auditing. No, the practicing CA shall perform work in a no, not SA and SQC1 also. Option B is going to be the correct option. Clear? So with that, we are done with the MCQs. Descriptive, whatever is complex, that we will try to focus more. Right. So starting with question number 1A. During the audit of a company, CA Jack obtained written representation from the management regarding all known instances of non-compliances with the laws and regulations that should be considered in the preparation of financial statements. So auditor asked the management to give a written representation regarding compliances with the laws and regulations. However, during the audit, he observed that the information provided in this regard was incomplete. However, he came to know that whatever written representations which are given by the management that were incomplete. And the audit evidence indicating such non-compliances contradicted with the written representations, casting doubt on the reliability. So there is a doubt regarding reliability of written representation. So how should CA Jack proceed in this situation? So the question is from SA 580. There you will find one paragraph, reliability of written representations. So when you have doubts regarding integrity of the management, you should get a doubt regarding reliability of written representation. If the written representations are inconsistent with other evidence, you have to resolve that matter. If you finally decided written representations are only not reliable, you have to even consider modifications to your opinion and reassess the integrity of the management. This is what the summary. So from SA 580, you will find a paragraph, reliability of written representations. That paragraph you have to reproduce. Next. CA Shubham, the auditor of Sigma Limited, is performing test of controls and also test of details using audit sampling. Okay. During these procedures, he observed deviations in compliance with the management's prescribed procedures for sales transactions of small values of a product at one location during test of controls. So while he is performing that procedures, he identifies the deviations in some test of controls. Additionally, misstatements were identified in the sample related to the small sale value transactions during test of details. Okay. How should he proceed? See, this question is very lengthy, but I will say, even if you ignore all this and just read this, even if you ignore everything and just read this last line, that also will make you write the correct answer. How should the auditor proceed to analyze the nature and cause of deviations and misstatements? So what you should do when you identify the misstatements? There is one question in the audit sampling chapter. So they say that whenever you identify deviation or misstatement, you have to find out what is a common feature. Is there any common feature? If there is a common feature, try to extend your audit procedures to all that items which have that common feature and find out that extra misstatement. Sometimes you might find a misstatement as an anomaly, then you have to be extra careful to determine whether really this is an anomaly because you exclude that anomaly from the projection of the misstatements. So all this discussion, we had a lot of elaborated understanding in our regular classes in the audit sampling chapter. The same question has been tested here. Next. CS Srishti, while auditing KSM Private Limited for the first time, utilized software to analyze financial data, comparing amounts recorded in the financial statements for the current audit year with the preceding 2 years. Comparison. So what she is doing, analytical procedure she is doing. Her objective was to evaluate the risk of material misstatement So that means this particular auditor is using analytical procedures as a risk assessment procedure. She's performing analytical procedure as a risk assessment procedure. As we all know, risk assessment procedure we can do by way of inquiry, we can do by way of analytical procedures, we can do by way of observation, we can do by way of inspection. So in that, auditor has chosen to perform analytical procedures as a risk assessment procedure. Identify the type of audit procedures performed by CS RIST in the given case. Discuss its relevance. So what audit procedure she is using, analytical procedure she is using, and explain whether an auditor's opinion can solely rely on such procedures. Here the twist comes. See, here auditor is performing only risk assessment procedures. Do you think by performing risk assessment procedures alone, will the auditor be able to express an opinion? The answer is no. By performing risk assessment procedures alone, you will not be able to express an opinion. In order to express the opinion, you have to perform substantive audit procedures. So you have to be very careful here. This small line will make you forget all these things. So here analytical procedures are getting used, agreed, but analytical procedures are used as a risk assessment procedures. Just by performing risk assessment procedures, we can't express our opinion. Next. CA Paras has accepted audit of the financial statements of an entity according to the standard on auditing. The auditor is required to send an audit engagement letter to the entity. What are the key areas that should be included in the engagement letter? What are the contents of the engagement letter? Like you have to identify the responsibilities of the auditor, responsibilities of the management, and you have to give reference to the applicable financial reporting framework. All that we have the objective and scope and all. So that content you have to write. Under what circumstances auditor is not required to record the terms of the engagement? See, there will be one paragraph. I spent a lot of time in the regular class to make you understand that. So if the terms of the engagement are already included in some law or regulation, you need not write it once again in the engagement letter. Just you can give reference. That paragraph you have to write. Next question from audit reporting, straightforward question. I think I need not explain. They're only asking you to directly write the definition of qualified opinion, the definition of adverse opinion, the definition of disclaimer of opinion. Straightforward question. I think we need not waste our time here. Next. Raju Limited engaged an external practitioner, CA Rajul, to provide assurance on its prospective financial information for the upcoming year. When you read the term prospective financial information, what should come to your mind? Standards on assurance engagement will become applicable here. The company projected a 15% increase in revenue, estimating total sales of 75 crores, driven by expected launch of this new product. Mention the applicable engagement and quality control standard. Which standard will become applicable? SAE will become applicable, and also SQC1 anyhow will become applicable for every engagement. Also explain how prospective information is different from historical financial information. Difference between historical financial information, prospective financial information. Historical information definition will be there, which has actually happened in the past, whereas prospective financial information, which is about to take place in the future. This is simple meaning, but there's a technical definition. That's what you are supposed to write. And in the case of assurance engagement, the assurance obtained by the auditor is moderate assurance. What assurance, guys? Moderate assurance is going to get when in the case of assurance engagements. So here if I revise, in audit you get reasonable assurance, in review you get limited assurance, in prospective financial statements, in assurance engagements you get moderate assurance. Next. 3A. Mahavir and Associates is appointed as statutory auditor of KBC Bank for the financial year 23-24. During the audit, Chandana, an article trained, noticed that Siddharth Industries has an outstanding balance of 50 lakh rupees as on 31st of March. On March 29, 2024, the company made a payment of 10 lakh rupees, reducing the outstanding balance to 40 lakh. So there was outstanding balance of 50 lakh rupees, but close to balance sheet date on March 29, 10 lakh rupees was paid by the bank, paid by the borrower. However, on April 4, Siddharth Industries initiated a reversal transaction. So they have they have made the payment, but it was able to find that this transaction was reversed immediately after the balance sheet date. See, same example, similar kind of example I have used in our regular class. Accounts regularized near about the balance sheet date. In order to avoid the classification as NPA, banks will do these kind of cheap tricks. So in order to avoid classifying an account as NPA, they try to record fake credit entries. Later they reverse it so that account will not get classified as NPA. So these are kind of accounts, we call them as accounts regularized near about the balance sheet date. So they are asking you as an auditor what you will do in regard to this matter. So what is your responsibility in case of accounts regularized near about the balance sheet date? One small paragraph will be there. So you have to treat them as NPA. If you find these kind of reversal transactions, still you have to, even though there is a credit, still you have to treat it as NPA. Okay, next. You are appointed as an auditor of the prestigious Township Club as auditor of prestigious township club for the financial year, what are the key points you should consider while auditing the income and expenditure? So club, so membership fees will be there, entrance fees will be there. Apart from that, from sale of food and services, from that special services also they are going to generate the revenue. So we have seen this. And expenditure, they spend on sports item, crockery, kitchen. So that expenses also you have to verify. So all these things you have to see. Next. During the audit of a limited company as a statutory auditor, you discovered that a fraud amounting to 5 lakhs has been committed by the company. What are the reporting requirements regarding fraud? Direct question. So with regard to fraud, what you have to report? Whether any fraud has been noticed in the company, noticed or reported in the company, whether any of the auditor has submitted form ADT4, are there any whistleblower complaints, and whether the auditor has considered that whistleblower complaints or not. 3 reporting requirements regarding fraud that you have to write it here. Next. CA Karan wants to test the completeness assertion relating to intangible assets related in the financial statements. Straight question, how do you verify completeness of intangible assets? Like this is from audit of items of the financial statements. You have to see the movement, whether additions are fulfilling the criteria given under AS26 or not. So direct question is there. Next. SA 330 states that the auditor shall design and perform test of controls to obtain sufficient and appropriate audit evidence as to operating effectiveness of relevant controls. Briefly discuss when such a test are to be designed and performed in accordance with SA 330. So auditor will perform test of controls to determine whether internal controls are operating effectively or not. But when he will perform test of controls, so there will be one small answer which says, if auditor at the time of making risk assessment procedures, if he expects that internal controls will work effectively, and if he wants to place reliance on internal controls, then only he will perform compliance procedures. If the auditor doesn't want to put any reliance on internal controls, then he can skip the compliance procedures and perform substantive audit procedures. So first point, when he will perform test of controls, when he at the time of performing risk assessment procedures, he expects to rely on internal controls, then only he will perform. If he doesn't want to rely on internal controls, he will not perform test of controls. Similarly, when auditor feels that substantive audit procedures alone will not give him all the evidence, if the auditor believes substantive audit procedures alone will not give him all the evidence, then also he will perform compliance procedures. So like that, 2 points will be there that you have to write. Next, if an auditor intends to place great reliance on effectiveness of controls, state its likely effect on audit evidence to be obtained as a result of such test of controls. Why a higher level of assurance may be sought by an auditor about the operating effectiveness of controls. So why auditor is going to get high level of assurance when he wants to rely on internal controls. So as I've told, just have a quick look at the answer. Yes, see these 2 points I have already clarified. So here they are telling, in designing and performing test of controls, the auditor shall obtain more persuasive audit evidence. The greater the reliance auditor places, the more effectiveness, the greater the reliance the auditor places on effectiveness of internal controls, more compliance procedures you want to perform. That means more you want to rely on internal controls, more compliance procedures you have to perform. Okay, right. Next. Lotus Limited, a rapidly growing manufacturing company, appointed Riddhi and Company as statutory auditor. The engagement team of Riddhi & Co. identified key areas requiring scrutiny, such as revenue recognition, inventory valuation, related party transactions. Based on his professional judgment, CA Ravi, the engagement partner, directed the engagement team to focus on these critical areas, emphasizing the need for detailed testing to ensure accuracy and compliance. Give some of the examples of the factors that need to be considered by CA Ravi for establishing the audit strategy. See here, most of the students will do mistake. They will write all the factors. We have 5 factors which should be considered while establishing audit strategy. Many of the students will write that. No. Here, the question is, there are so many factors. In that, one of the factor is there, which is those matters which auditor feel significant in their professional judgment. Like that one factor will be there. For that one factor, examples will be there. That is what you are supposed to write. But I know majority of the students will ignore and write all the 5 points. No, they are not asking about all the factors. They are only asking about, see here, this statement. The engagement team identified key areas. Based on his professional judgment, the engagement partner directed the engagement team to focus on these critical areas. So the matters which are relevant in the auditor's professional judgment. So that, like that, one sub point will be there. That sub point related examples. See here. Consider the factors that in the auditor's professional judgment are significant in directing the engagement team's efforts. So in that, few examples will be there that you are supposed to write here. Not all the factors which have to be considered in the establishment of audit strategy. Next, coming to the next question. KSJS and Associates are the statutory auditors of Moon Limited for the financial year 23-24. During an audit briefing, CA Sanket, the engagement partner, explained that the auditor must assemble the audit documentation in an audit file and complete the administrative process of finalizing the audit file on a timely basis after the date of the auditor's report. We know that within 60 days you are supposed to do it. He also highlighted the requirements of SQC1 regarding establishment of policies and procedures for the retention. We also know how long it is required to be retained, retention of audit documentation. Explain the requirements related to timely assembly and retention of audit files in accordance with relevant engagement quality control standard. Do you want me to explain this? Very simple, no? Assembly of audit files, 60 days from the date of audit report. It involves administrative activities. Once you have assembled, you should not delete or discard. You have to store it safely for a period of 7 years from the date of auditor's report or group's audit report, whichever is later. The same thing you are supposed to write. The reliability of audit evidence depends on source, nature, and the circumstances under which it is obtained, including the control over its preparation and maintenance. Although exceptions may exist, few generalizations can be made about few generalizations can be made about reliability of audit evidence. Considering above, discusses such generalizations that can be made about the reliability of audit evidence. Principles regarding reliability of audit evidence, or generalizations regarding reliability of audit evidence, like original evidence is more reliable than photocopies. Evidence obtained from independent source is more reliable. Photocopies are less reliable than the original copies. When internal controls are effective, internal evidence will be more reliable. When multiple evidences are consistent with each other, then they will be more reliable. We have few principles now that you are supposed to write. Next. Kite Private Limited acquired an immovable property of substantial value during the financial year 23-24, which is recorded in the financial statements as an addition in the schedule of PPE. The auditor also observed that this immovable property has been mortgaged to a bank for availing credit facilities. How should the auditor verify the rights and obligation assertion? Very straightforward question. How do you verify rights and obligations of an fixed asset? So this is once again from audit of items of financial statements, like you have to check the supporting documents, you have to check the invoices, if land and buildings are there, you have to check the title deeds, if vehicles are there, you have to check the RC cards. In case if the property is mortgaged and original documents are there with the banker, you can get external confirmation. So all these things you are supposed to write. Next, last set of question. KR and Associates, an auditor of FDP Limited, observed that the company has implemented various internal controls addressing financial reporting, operational efficiency, and compliances during their preliminary evaluation. CA Karan suggests that all controls should be assessed to mitigate the risk of material misstatement in the financial statements, while CA Rajat is of the view that only that controls, those deemed relevant to the audit, should be assessed. Tell me who is correct. CA Karan says all internal controls are required to be evaluated. CA Rajat says no, only those controls which are relevant to the audit should be evaluated. Whose view is correct? CA Rajat's view is correct. Comment whether auditor should assess all the internal controls, not required, or limit the assessment to only those controls relevant by the auditor. Yes. Also discuss the factors influencing the auditor's judgment on the relevance of controls. Depending on what factors auditor will decide whether a control is relevant or not. Like if you remember materiality, risk, the items which they are protecting. So like that we have one question in the risk assessment, internal control. What are the factors which affect auditor's decision regarding relevance of internal control? The same thing you are supposed to write. Next, see, this is one such question. They have given a lot of information. Okay, they have given a lot of information here. But just read the last line. What are the advantages of audit program? So once again from audit strategy, planning and program. So you have to write what are the advantages of audit program. Straightforward question. But they have given this much content as I have told to kill your time. Next one. As a statutory auditor of Guinea Limited, you needed to verify if the company has valid legal ownership rights over the inventories recorded in the balance sheet as on 31st of March 2024. What audit procedure should you perform to verify company's ownership of the inventories? How do you verify ownership of inventories? Once again, audit of items of the financial statements, a straightforward question. Next. During the audit of a company, CA Atul noticed that company is facing significant skilled labor shortages, resulting in hampering operations of the company. Skilled labor shortages, operational difficulties, operational indicator SA 570. The company's manufacturing is dependent upon skilled labor coming from villages in certain districts of eastern UP. However, due to job opportunities available near villages now, many are not interested in leaving their native villages. So there is a huge labor shortage which the company is facing. The company failed to keep its commitments due to such situation, consequently lost orders and faced a decrease in its revenue, loss of revenue, loss of market share. The fixed costs of the company remain at a high level. As a result, the company is facing a liquidity crunch, liquidity crisis, and is not able to pay its creditors on time. Financial indicators. The bankers of the company are also not willing to help the company to tide over liquidity crisis. Even bankers are also not ready. See, all this, through all these paragraphs, they are trying to say the company is facing various cases which should bring the auditor a doubt regarding entity's ability to continue as a going concern. So the question is regarding SA 570. It is relating to going concern. The auditor has doubts over going concern status of the company. How should the management of the company try to address auditor's concern? What audit procedures may be performed by the auditors in such a situation? See, they are asking two questions here. So one question they are asking, see, these many situations the company is facing. So auditor has got a doubt. Now what management should do to resolve the auditor? What management should do to convince the auditor, sir, our going concern is still valid? What they can do? So if you look at the answer, they say that one thing what management can do is they can prepare a cash flow forecast. They can prepare cash flow forecast. Sir, even though we are facing these many problems, this is how the cash flows which are going to be in the coming 1 year. We will have enough of cash flows and we'll be able to continue, sir. There is no requirement to get closed in the foreseeable future. That they can do. And as an auditor, you have to verify whether that cash flow forecast has been prepared on proper assumptions or not, whether that cash flow forecast has been reliable or not. And also you need to check whatever estimates, whatever future decisions which the management has taken, are they practically feasible? Is there any chance of happening, or just they have done vague assumptions? So that audit procedures you have to perform. So I please ask you to specifically go through the answer of this question. Here it is a specific question, a practical kind of question they have asked. Please do look at the answer of this question. Clear? So with this, we are successfully done with MTP Series 1. Comfortable, everybody? Right. Okay, guys, since we are done with the Series 1 MTP, now we will try to do Series 2 MTP. So as usual, we'll start with the case scenario based MCQs. Let me pick up case scenario number 1. Oval Services Limited appointed Rupa and Associates as the auditors for the financial year 2023-24. The auditors believe that an audit program is crucial in providing the clear and comprehensive instructions for the task to be carried out, offering a total perspective on the work involved. So auditors believe that audit program is going to be very, very important. This is particularly important for large audits, and as such, they prepared an initial audit program based on the company's organizational structure and effective internal controls. During the audit, CA Nitin, engagement partner, identified issues with the company's debt management practices, however, prompting the inclusion of a more detailed review of loan agreements. He finds something wrong regarding debt management, so he decided he will do a detailed review of loan agreements. However, in his opinion, the planned review of petty cash was unnecessary due to the company's policy of limiting cash transactions. So he verified the controls in a detailed manner, and he felt that company is having very limited cash transactions. He doesn't have any much major cash transactions. To the extent possible, they are limiting cash transactions. Everything they are trying to do it to the bank. So that's why they thought that that's why auditor felt that they will ignore the petty cash. They will not verify the petty cash. Why? Because the company is limiting cash payments. They are avoiding the cash payments. Is that a wise decision? Yes, it is. Thus, review procedure was removed from the audit program. So they felt we will not verify petty cash, other cash expenses we will verify. Is that a correct decision? Yes, there is a logic for that as well. So regarding that, we'll have one question, I guess. So this one, whether audit team is correct in excluding the planned review of petty cash from the audit program? Yes, 100% yes. No is not a correct option. If you see here, yes, we have two options. So option B says yes, because the company's internal controls and policy of limiting cash transactions reduce the need for petty cash review in the audit program. Yes. Because the audit program should only focus on areas with high financial risk and petty cash is not a high risk. No, we are not ignoring, not because it is high risk. We are ignoring it because the company is having strong internal control system and they are trying to limit the cash transactions. Clear? And they are not asking us, they are not telling that auditor is ignoring every cash payment. Auditor is ignoring only petty cash. Yes, it is a wise decision. So first option is going to be B. So let us have a cross referencing with the key as well. Yes, first option is going to be B. Next. Now once again, if we get back to the case study, to verify the balances of trade payables, the auditor decided to send external confirmation request to the creditors of the company. Very good. These requests were made to verify the balances as on 20th of March 2024. A date chosen deliberately to ensure the accuracy and completeness of the liabilities, free from any influence or prior acknowledgement of the management. So here it is very important. They have sent the confirmation request to the creditors on other than balance sheet date. Can they do it? Yes, they can do it. Other than the balance sheet date also you can get the confirmation. There is no issue regarding it. but they have sent the confirmation without the prior knowledge of the management. Is it correct? No. Why? Because if you remember the discussion, whatever we had in SA 505, when you are sending external confirmation request, you have to take the help of the management. You have to consult the management. After consultation with the management, you have to send the confirmation request to the third party. Clear? So there is no problem with regard to sending the confirmation, asking for the balance as on that 20th of March, but without prior consultation of the management, this is not a good thing. This approach was taken to maintain the integrity of the confirmation process. However, it was noted that Keshav traders and Amit distributors did not respond to the confirmation request. So you have to definitely consult with the management before you send the confirmation request. So why this importance also I have told you in the regular class. See how the small things we explain in the regular class is going to get tested as it altogether a different question. So if you look at that, whether the decision of auditor to send the confirmation request to the creditors of the company as on 20th of March justified, yes, it is justified. But what is the problem? They did not have prior consultation of the management. So if you look at A, yes, decision of the auditor is correct as auditor is allowed to choose any date reasonably close to the balance sheet date for confirmation. And the selected date helps to ensure the accuracy of the liabilities without consultation from the management. No, they should have consultation. Option B, no, decision of the auditor is not correct as the auditor should have sent the confirmation request for the balance sheet date. No, they can send it on other than the balance sheet date, but they have to do it with the consultation of the management. Yes, decision of the auditor is correct as the auditor is allowed to choose any date which is reasonably close to the balance sheet date for confirmation, and the selected date should be decided in consultation with the management. This is the correct option. It should be decided in consultation with the management. No, decision of the auditor is not correct as confirmation should be asked within a week of the no. This is not irrelevant, completely out of box. So option C is the correct option. So they can send it on other than the balance sheet date, but you have to consult with the management. So that is the second option. Next. Which of the following is not an appropriate procedure to verify the balances of Keshav and Amit distributors? Now, if you come back to the case study once again, the auditor sent the confirmation request, but two third parties did not respond. Amit did not respond, and also Keshav traders did not respond. So if you don't get a response from the third party, what you should do? You should try to perform alternative audit procedures. Now they are telling which is not an appropriate alternative audit procedure. Breaking down the balances into individual transactions and making sure they actually happened. Yes, this is an appropriate alternative procedure. Checking payments made after the year end to vendors who didn't respond to confirmation request. They did not respond. But later, if that balance is really genuine, payment would have happened after. So checking that is also an effective alternative procedure. Comparing the balances to original invoices, very much a good alternative audit procedure. Requesting a written representation from the management. See, just if you try to get the written representation, that is not a audit procedure. That is not an effective alternative audit procedure. Why? Because even in SA 580 also we have seen written representation are just a supporting evidence. They cannot be used as evidence on their own. So that's why here D option is not a appropriate procedure. Next one. Right. So third one is D. Now let us come back to the further details. Furthermore, the auditor noted that in the financial year 2023-24, the company's PPE was revalued, resulting in an increase of 5% in the net carrying value of its machinery from 10 lakhs to 10.5 lakhs. So company made a revaluation. Because of the revaluation, 5% change is there. Now regarding this also there will be a question. In the given case, is there any requirement for separate disclosure of the PPE? No. Disclosure of the PPE will be required only when there is a change of 10%. In the given case, there is only 5% change is there. When the change is 10% or more, then only we are required to give a separate disclosure. Okay, right. Next. So fourth answer should be B. Okay. Next. Also, due to significant compliance burden, companies considering to convert into a LLP. Management's view that LLP structure as a hybrid model that combines the advantage of both companies and partnerships. Additionally, they believe this conversion would relieve them of mandatory audit requirements. So they are feeling that if they get converted to LLP, they will be relieved of audit. Will LLP audit is completely ignored? No, they have a criteria. What criteria? So let us see. What is your perspective on the management's view regarding the audit requirement for an LLP? Number one, an LLP is always required? No. An LLP is always required to conduct an audit if either the turnover exceeds 40 lakh rupees or the capital contribution exceeds 25 lakh rupees. Yes. An LLP is always required to conduct an audit if either the turnover exceeds 25 lakh rupees or capital contribution 40. No, turnover should be 40, capital contribution should be 25. An LLP is always required to conduct an audit if the capital contribution exceeds 25 lakh rupees and the turnover exceeds 40 lakh rupees. No, even if one of the condition gets satisfied, LLP is required to undergo mandatory audit. So fifth option should be B. Next. Case scenario number 2. Let us try to have a look at that as well. Shreyansh, a chartered accountancy student, is part of the engagement team conducting audit of Coimbatore branch of XYZ Bank. Under the guidance of CA Dilip, the engagement partner, Shreyansh has been assigned the task of verifying provisions. Guys, I will tell you, same question they have asked in the RTP. There is a descriptive question on the same points. Even the figures are also same. Even the figures, whatever they have given, that are also same. I request you to refer to the RTP video. In the RTP video, there is one descriptive question. Everything is same, guys. Everything is same. Even figures are also same. Okay. So you can refer to the RTP video for detailed explanation. So I'm not once again doing a double explanation here. Right. But anyhow, we will try to solve the answers. Is the provision made for AB Industries appropriate? So AB Industries is in doubtful category. If it is a doubtful category, if it is fully secured, how much provision is required to be created? 25% of the provision is required to be created. So 10 lakhs into 25%, 2.5 lakh rupees of provisions required to be created, but they created 5 lakh rupees. Is it correct? No, it is not correct. No, as the provision required is only 2.5 lakh rupees. Next. One more question also will be there. Is there any other question? Yeah. This 8th one is also. What is the minimum provision required for RS Enterprises, which is a doubtful D2 category? So RS Enterprises, an entity is there, which is into doubtful category, D2 category. 30 lakh rupees is outstanding amount. So for this category, it is fully secured. 40% provision has to be created. The provision amount will come to 12 lakh rupees. So 12 lakh rupees of provision has to be created. So what is the provision? 12 lakh rupees. So 8th one is B. Is there any other question? Okay. So from that part, there is no other question. However, we have rest of the case study. A borrower, Mr. Shyam, has availed following 2 loans from the branch. Housing loan EMIs are overdue for 120 days as on 31st of March. So outstanding balance for more than 90 days rupees. 90 days, it has to be classified as NPA. And he has also taken car loan where EMIs are overdue only for 60 days. Now you tell me, since this account hasn't become overdue, will we classify it as NPA? Yes, still you will classify it as NPA. Why? Because in audit of banks, I have told you one important point. NPA classification will be borrower wise, not facility wise. Even if one loan facility taken by the borrower has become NPA, all the names, all the loans in his account should be classified as NPA. So NPA is borrower wise, not facility wise. So we have a question here. Considering the housing loan and car loan availed by the borrower Shyam, which of the following statements is appropriate? Both housing loan and car loan should be classified as NPA in accordance with RBI norms. Yes. Housing loan should be classified as NPA in accordance with RBI. Car loan should be classified as standard. No. Car loan should be classified as NPA. Housing loan should be standard. No. Both housing loan and car loan should be classified as standard. No. Option A is the correct option. Next. Yeah. There will be here one more. Regarding agricultural advances also we have one question. The branch has provided a loan of 20 lakh rupees under Kisan Credit Card KCC scheme to a farmer for the cultivation of paddy, which has the harvest period of 3 to 4 months. So it is a short-term loan, short-term agricultural advance. Why? Because the duration is 3 to 4 months. So a short-term agricultural advance will be classified as NPA if it remains overdue for more than 2 crop seasons. More than 2 crop seasons. 90 days limit will not become applicable here. There has been no transaction in the account for the last 90 days. The branch has classified the loan as a standard asset. Is it correct? Yes. Why? Because it need not be classified as NPA. 90 days condition will not become applicable here. It will be classified as NPA if it remains overdue for more than 2 crop seasons. Here 4 months of crop season is there. Up to 8 months also if you don't have any credit, no problem. So you can classify it as a standard asset only. Next. So regarding this, we'll have a question. As regards the description of agricultural advance under Kisan Credit Card, which of the following statements is most appropriate? The branch has erred. That means they have erred in making classification as per RBI norms. It is a substandard. Is it a substandard? No, it should remain in the standard category. The classification made by the branch is proper. However, since there are no transactions in the account for 90 days, it is an SMA, special mention account. No, there is no need for classifying it as SMA. The classification made by the branch is proper. So there's not even need for SMA. They can keep it under normal category. Whatever they have done it as a standard category, that is very much appropriate. So option C will be the correct option. The branch has erred in making classification. No, they have done correct only. So option C is the correct option. So now we have one more case scenario. Let us see. MCP and associates are having 3 partners, namely CA Mahavir, CA Chandana, and CA Prabha. CA Mahavir is about to conclude audit of a company. During the audit, he noticed that there is a shortage of important raw materials being imported from China due to prevailing geopolitical situations. So shortage of important supplies. What it is? What should strike your mind? SA 570. He is satisfied with the company has shared with him its plan to deal with the situation. However, management had a plan. Sir, even though there is a shortage of this item, they have some alternative. He is satisfied with the assessment of the company for dealing with the matter. He is satisfied. Okay, whatever management told, it is justified. The issue is disclosed in the financial statements, and considering management's assessment, it is felt that use of going concern assumption by the company in the preparation of the financial statements is very much appropriate. He also verifies that all subsequent events have been accounted for and request written representation from the management, although the representations include qualifying language. Significant findings were communicated both orally and in writing to those charged with governance with relevant communications documented. So 560, 570 related points they have told. So regarding this, they have a question. Which of the following best describes CA Mahavir's responsibility for subsequent events? When it comes to subsequent events, what are auditor's responsibilities as per SA 560? Let us see the option. He has no obligation to perform audit procedures. No, he is having obligation to perform some audit procedures regarding subsequent events. He should perform necessary audit procedures to know about events occurring between the date of financial statements and the date of auditor's report. Yes. He has no obligation to perform audit procedures after signing. No. He has to rely only on written representation. No, you can't rely only on written representation. Written representation is only a supporting evidence. It is not a evidence by itself. So option B is the correct option. Next, CA Chandana is conducting an audit of a manufacturing company dealing in towels and bedspreads. The company's inventory is spread across its own location and third-party premises. As a part of audit procedures, she is performing many audit procedures required by different standards on audit. She attends the physical inventory count, sends the confirmation request for trade receivables, and assesses controls. She relies on sampling extensively while auditing transactions, balances, and controls. Okay, now what is the question out of it? Let us see. What is the most appropriate action CA Chandana should take for verifying inventories held at third parties premises? What she should do in order to get the evidence regarding inventory which is held at the third party premises? Request confirmation of the inventory's quantity and condition from a third party, or even you can inspect at their premises. Any choice. Either you can request a confirmation request or you can go and inspect that inventory if possible. A looks fine. Inspect all inventories at the third party's premises without requesting confirmation. No, you can request. In case if you have a problem with the confirmation, then you can go and inspect. Rely only on management written representation. Absolutely bullshit here. Confirm the inventory's value along with the quantity and condition from the third parties. See, it is telling confirm. Compulsorily, you have to get confirmation. But sometimes confirmations will not be reliable. In that case, what we do? Even we can go for inspection. So option A sounds more suitable here. So 11th one option is A. Next one. Okay, one more fact is there here. CA Prabha is auditing a firm's financial statements and performs detailed procedure to verify assertions. Okay. The firm is engaged in export of goods to Europe. The sales invoices are raised in euros, are converted into Indian rupees as per the applicable norms. She checks the classification of expenses, ensures the trade payables are genuine, compares current and past wages, examine the title deeds for land, and check for the accuracy of the calculation of the conversion of the foreign currency into rupees for export invoices. That means she himself is calculating, she himself is converting that foreign currency into INR. So what she is doing? By doing the calculation again by herself, she is trying to do recalculation. That is what even the question about. Which audit procedure CA Prabha performed to verify whether conversion of foreign currency into Indian rupees is proper or not? She has done the recalculation. 12th answer is B. She has done the recalculation. So now we have some general MCQs. CA Kamal, a partner at KPS & Co, is conducting an audit of Riddhi Limited, a manufacturing company. During the audit, it was found that KPS & Co generates 72% of its revenue from Riddhi Limited. This we have already seen in the previous MTP. So when the auditor is relying more on a single client for their audit fees, that will be a what kind of threat? Self-interest threat. So it will be a self-interest threat. 13 is B. Next. The auditor is evaluating the most appropriate method to assess the internal control system of the company. The selected method should be widely recognized for gathering information about existence, operation, and efficiency of internal controls. Should also minimize the risk of oversight. Further, the method should facilitate easier interim review of controls. If there is any method which will fulfill all these things, which method it will be? It will be an internal control questionnaire. So which method will be most appropriate for evaluating internal controls based on the above description? Internal control questionnaire will be the best method here. Next. Gauri told her friends that she had read a news report about how a company has misled its auditor by producing some fabricated documents. Fabricated in the sense manipulated documents. Which of the following statements seem to be appropriate in this regard? Auditor has to conduct audit by exercising professional skill. Yes. But he is not an expert in discovering genuineness of the documents. Yes. Hence, management consisting of dishonest person may have led him to rely upon fabricated documents deliberately. Yes. This statement is correct in every aspect. It was wrong on the part of the auditor to rely upon fabricated documents. He must have discovered it. No, boss, he is not an expert in discovering the genuinity of the documents. Management cannot mislead auditor due to high level of knowledge and expertise possessed by him. The above is an outlier case. One on no management, no matter how much knowledgeable the auditor is, management will always have the opportunity to produce fabricated documents. Although it was wrong on the part of the auditor to rely upon fabricated documents, he cannot do anything in the matter. He has to report on the basis of documents provided to him. He has no duty in this regard. No, he has to do the audit as per professional skill. So he has to be careful. You can't say there is no responsibility on the auditor. He is having the responsibility to exercise the professional skill. So 15th is option A. Yes, 14A, 15A. Done. Now, let us have a look at the descriptive questions. Okay. ABC Private Limited, a manufacturing company, is facing significant financial difficulties due to downfall in the market and increase in the cost of production. Indicator regarding going concern SA 570. CA Ram, the auditor of ABC Private Limited, has identified the following conditions. The company has defaulted on a major loan repayment. Current liabilities exceeds the current assets. Sales revenue has declined by 30%. So all these are financial indicators which cast a significant doubt on entity's ability to continue as going concern. Management has not yet performed an assessment of the company's ability to continue as a going concern, but they provided assurance for implementing corrective measures, including cost-cutting initiatives and discussions with the creditors. Now, what is the question? Which additional audit procedures need to be performed by CA Ram in accordance with SA 570? So you found an indicator which will cast a significant doubt on entity's ability to continue as a going concern. So here you have to perform further audit procedures. Since management did not make the assessment yet, they should ask the management to do the assessment now, and also you should perform additional audit procedures like sitting with the management, trying to know about their future plans, checking whether they are feasible or not, asking them to prepare a forecast, verifying that forecast, reading the interim financial statements, getting the written representation. So all that further audit procedures you have to write here. Next. CA Rishi is appointed as an auditor of Air Limited for the financial year ending on 31st of March 2024. During the audit, he observed that the company's books of accounts reflect a significant number of trade payables and receivables as on the balance sheet date. To verify the accuracy of the trade receivables, CA Rishi decided to send the confirmation request to some of the trade receivables. However, the management request refused to permit him to send the confirmation request to the selected parties. How the auditor should proceed? SA 505, management's refusal to allow the auditor to send a confirmation request. What you should do? Should first discuss with the management, identify the reasons, re-evaluate the integrity, try to perform alternative audit procedures. If you are unable to do it, try to modify the opinion and also communicate with those charged with garnets. SA 550, small paragraph will be there. Management refusal to allow the auditor to send the confirmation request. You have to write it. Next one. CA Tanuj, the auditor of Kiran Limited, completed the audit work and issued the auditor's report on 18th of August for the financial year ended on 31st of March 2024. During the final assembly of the audit file, he discarded some supporting schedules as somewhere outdated and corrected cross-referencing errors of working papers. No new audit conclusions were drawn and the final audit file was assembled on 10th of October. Did they do it within 60 days? Yes. So from 18th August 2024, if you calculate 60 days, it will come somewhere around August, September, October. Yeah, somewhere around 18th or 17th October it will come. However, they assembled the audit file on 10th of October only, well within 60 days. Yes, they have done it correct. And also they did not form any conclusions. Yes, they did only administrative work like deleting superseded documents, giving cross references. They did only administrative changes. Yes, they can do it. So on the basis of standard on auditing regarding audit documentation, comment on the action taken by CA Tanuj. CA Tanuj has done everything in a correct manner. So first you have to write about assembly of the final audit file, then write the conclusion. CA Tanuj is correct in his actions. So coming to second question, Deepa Limited initially requested an audit engagement for the financial year 23-24. However, midway through the audit process, the management claims that they are unable to provide complete supporting documentation for a significant portion of their receivables. As a result, the management asked the auditor to change the audit engagement to a review engagement, changes in the terms of engagement. You should accept it only when there is a reasonable, only when it is Only when there is a valid reason. If there is no valid reason, you should not accept the changes. In case if the management has asked you to change the engagement to one which provides a low level of assurance, should you accept it without any reasonable justification? No, you should not accept it, since here there is no reasonable justification. What will be a reasonable justification? Like change in circumstances, misunderstanding, that could be a reasonable justification. But here, auditor asked for some information, management not being able to provide it, they are telling, sir, we are not able to provide the information, change it to review engagement. So they are requesting the auditor to change the engagement to the one which provides lower level of assurance. Should he do it without any reasonable justification? No. Here the request of the management is not permitted. He should not change the terms of the engagement. Clear? Next. 2B doesn't need any explanation. They are asking you to write applicability of CARO. Straightforward question here. For which companies CARO is not applicable? Banking company, insurance company, Section 8 company. We have that no private company satisfying 4 conditions. Direct question that you have to write. Next. See, this question is also very straightforward. They have given a lot of information here, but even if you read the last line also, you'll be able to write the correct answer. What are the benefits and need of an audit? From nature, objective and scope of audit, what are the benefits of an audit? What is the need for audit? So we have advantages of audit. No, like it will provide, it will helpful for negotiation of loans. It will protect the interest of the shareholders. So like that, a few advantages are there. That is what you are supposed to write. Next, 3A. During the audit of Smile Bank, CSVT focused on understanding the risk management process of the bank. She reviewed how management developed controls and used performance indicators to monitor key business and financial risk. So auditor is conducting audit of a bank. She wanted to know internal controls. CSVT also assessed whether risk management system effectively identified and mitigated risks in required areas. How should CSVT evaluate adequacy of bank's risk management controls? As an auditor, what you can do to evaluate bank's risk management control? So this we have discussed in our regular class. The answer will be similar to control environment. Whether those charged with governance is participating or not, involvement of those charged with governance. Let me show you the answer also. Risk management system in the case of banks, it will be very similar to control environment. We draw on the similarities also in our regular class between the control environment and this question. So where is it? I think we have crossed it. No, not this one. Yeah, this one. So how you will get to know whether bank is having effective risk management system or not? So you have to check whether there is an involvement by those charged with governance, how they are identifying, measuring and monitoring the risk. Then you have to implement control activities. Then just implementing controls will not be enough. You have to even monitor that controls, and even you need to check whatever information systems which the bank is using, nothing but whatever technology they are using, whether that technology is reliable or not. Then we have a question regarding cooperative societies audit. Aman Cooperative Society appointed FAB and Associates as an auditor for the financial year 23-24. During the audit, the auditor noted the following details. What are they? Total number of shares, 1,000 at the rate of 10 each. The net profit before compulsory transfer to fund is 10,000 rupees, and they have in fact transferred 2,000 rupees to the reserve fund. After that, net profit is 8,000 rupees. Mr. Dhairya, a member of society, holds 200 shares amounting to 2,000 from the previous year. Guys, can a member hold any amount of shares in the cooperative society? No, there is a restriction. What is that restriction? If you see here, according to section 5 of the society, no member of a society other than a registered society can hold such portion of the share capital of the society as would exceed a minimum of 20% of the total number of shares or the value of the shareholding amounting to 1,000. Either 20% of the shares or value of 1,000, whichever is lower. Going by that logic, whichever is lower. So in the given case, Mr. Dhairya, a member of the society, is holding 200 shares amounting to 2,000 from the previous year. In view of the aforementioned restriction on shareholding of the member, Mr. Dhairya is allowed to hold a maximum of 100 shares only. 20% might come to 200. Or they have also told at face value of 1,000, no, whichever is lower. So 1,000 is lower, they can hold maximum of 100 shares at the rate of 10 each only. Next. Upon verifying the society's borrowings, the auditor found that cooperative society has accepted a loan from Mr. Shivam, a non-member. The auditor did not find any restriction regarding this in the society's bylaw. So they say that the cooperative society can accept loan from even a non-member also, provided there is no restriction in the bylaws. So in the given case, they have clearly told that they have accepted a loan from a non-member. In the bylaws also, there is no restriction. Is it permitted? Yes, permitted. If there is a restriction in the bylaws which says that society should not accept a loan from a non-member, then they should not accept it. But clearly they're telling in the bylaws there is no restriction. That's why they have accepted it. No objection here, no non-compliances here. Next. In establishing the overall audit strategy, the auditor shall, among other considerations, ascertain nature, timing, and extent of resources necessary to perform the engagement. What are those considerations in detail? So they are telling, while establishing audit strategy, one of the factor which you will consider will be nature, timing, and extent of resources. What are all other factors? Like we have 5 factors. No, identify the characteristics of the engagement, reporting considerations we have to identify, engagement knowledge obtained from previous engagements, matters that are significant in the auditor's professional judgment, and even nature, timing, and extent of resources. That 5 factors you are supposed to write here. Next. During the audit of HST Limited, CA Mukund, the auditor, observed a significant volume of unsold electronic parts as inventory that had remained stagnant for more than 2 years, obsolete stock. He noted that the company was facing difficulty selling these items due to changes in the market. Additionally, some parts were also damaged and others were discontinued models. CA Mukund also ensured that inventory was accurately valued to ensure proper financial reporting. You are required to outline the detailed audit procedure that are generally undertaken when auditing such inventories, which at the time of observance of physical counting were noted as being damaged or obsolete. That means what audit procedures you are going to perform regarding obsolete, damaged, or slow moving inventories. So what you should do, you should compare the cost with the replacement cost. You should get a list of vendor prices to check whether the cost is less than the current prices. Calculate inventory turnover ratios you can do. In manufacturing environments, you can even check the overhead allocation to know the valuation properly. And we have to check AS to requirement, whether it is valued at cost or NRV, whichever is lower or not. Next one. The engagement partner of a firm of auditors is explaining to his audit team undergoing practical training, interrelationship between audit strategy and audit plan. Discuss the points with the engagement partner will explain to his team. Interrelationship between audit strategy and audit plan. We all know both are closely related with each other. The auditor first will establish audit strategy, which sets the scope, timing, and direction of the audit plan. If you make any changes in the audit plan, automatically changes are required to be made in the audit strategy. So development of audit strategy and audit plan are not different processes. They are closely interrelated with each other. So like that we have one question, no? So that question we are supposed to write here. Next one. Callen Retail is preparing its annual financial statements and the auditors are tasked with determining materiality. The company has used revenue as a benchmark as it is a key indicator of the performance. However, Callen Retail has recently opened new stores and closed underperforming ones, which could significantly affect both revenue and profitability. As per given case, what factors should be considered by the auditor when selecting appropriate benchmark? Once again, even if you ignore all the facts, whatever they have given, read the last line also, you'll be able to write the correct answer. This I told you numerous amount of times. What are the factors which will be considered by the auditor in selecting an appropriate benchmark? Most important question from essay 320. The same thing they have told, like any element of financial statements can be selected as benchmark. Sometimes it depends on the information needs of the users of the industry. It depends on relative volatility of the benchmark. Sometimes there will be indication the applicable financial reporting framework. So like that 4 points will be there. That simple 4 points you are supposed to write. Then coming to the 5th question. AR and Associates have been appointed as statutory auditors of Future Limited, a company engaged in the business of manufacturing of hardware products. They are analyzing the monthly trends for expenses like rent, power, fuel, repairs, etc. and also verifying attributes of such types of expenses. Listed down the attributes, common attributes which are applicable for all other expenses, like whether there is a supporting document or not, they belong to the current year or not, it is authorized or not, whether proper classification has been done or not. Some 6-7 points will be there. Common attributes for all other expenses. That common attributes you are supposed to write here. Next. CA Kavita, auditor of Healthify Limited, while assessing potential risk of material misstatements related to litigations at Healthify Limited, identified a possible legal claim that could affect the financial statements. She sent a general inquiry letter to the company's external legal counsel, Mohit and Company, seeking clarification. Communication with the entity's external legal counsel. However, Mohit and Co. informed her that their professional rules are prohibited them from responding to those general inquiries. So there is a restriction on the entity's external legal counsel to respond back to the general inquiries. In that case, what option is available? So this is related to essay 501, obtaining audit evidence regarding completeness of litigations and claims. So there they say that generally we try to get the information by communicating with entity's external legal counsel. But in case if we are unable to get the response from the entity's external legal counsel, then we have to perform alternative audit procedure. And one of the alternative audit procedure which essay 501 says is If the external legal counsel is prohibited from responding to general inquiry, you can send a letter asking for a specific inquiry. What does SA 501 say? SA 501 says, in case if the external legal counsel is prohibited from responding to general inquiry, first thing what you should do is you should perform alternative audit procedures. And one more thing what you can do is, in case if they are prohibited from responding to general inquiry, you can send them a letter of specific inquiry. Sir, what details should be there in that specific inquiry letter, sir? The list of all the litigations and claims. Wherever available, management's assessment of outcome of each of the identified litigation and claims and its estimate of the financial implications. Nothing but in that inquiry letter, you can include what is the management's assessment, what the management is thinking about that litigation. Will they win it? Will they lose it? If they lose it, what will be the amount they have to pay or incur? So that also should be included in that specific letter of inquiry. And also a request that entities external legal counsel confirm the reasonableness of management's assessment and provide the auditor with further information if the list is considered by the entities external legal counsel to be incomplete. So in my specific inquiry letter, I will include a list of litigations and whatever management is estimating, that I will include. And I will request the entities external legal counsel to comment whatever estimate management has made regarding litigations. Is it appropriate? And whatever list management has given me regarding litigations and claims, is that complete or something management has tried to hide from me? So these entities, these information, I will ask entities external legal counsel to respond back to me. Understood? So summary is, in case if the entities external legal counsel is prohibited from responding to general inquiry, you can send a letter of specific inquiry containing these details, list of litigations, management's assessment regarding litigation, and I will request that entities external legal counsel to confirm whether management's assessment is correct or not, whether the list given is complete or not. Clear? Next. Familiarity threats are self-evident and occur when auditors form relationship with the client where they end up being too sympathetic to the client's interest. Explain. Straightforward question here. They're asking you to explain about familiarity threat. Write the definition. Definition anyhow they have given. Write the examples. Examples, if you add 3-4 examples, you will get full marks. Next. When more pervasive audit evidence is needed regarding the effectiveness of control, it may be appropriate to increase the extent of testing of the control as well as degree of reliance on controls. Discuss the matters the auditor may consider in determining the extent of test of controls. How much extent of test of controls you are supposed to do, that depends on what factors. So these are all the various factors which auditor is required to consider to determine how much extent of test of controls he has to perform. Like he will consider factors like frequency of the performance, how frequently the control is performing, length of time during the audit period, for what duration of time the auditor want to rely on the internal controls, what is the expected rate of deviation, the relevance and reliability of the audit evidence to be obtained regarding the operating effectiveness, and also the extent to which an evidence is obtained from tests of other controls related to the assertion. So straightforward question. So these are the various factors which are required to be considered in determining extent of test of controls. 5 points, guys: frequency, length of time, expected rate of deviation, relevance and reliability of the audit evidence, how much evidence you can get from other tests. Okay. Next. ASD Limited's business has grown from one state of India to various countries of the world. Since the business has increased manifold, the management decided to appoint joint auditors for conducting the statutory audit of the company. They appointed 3 CA firms for which audit work the joint auditors will be jointly and severally responsible. Once again, if you ignore everything, read the last line, you will be able to write the same answer, correct answer. What are the areas in which joint auditors will be jointly and severally responsible? 5-6 points we have seen, no? The work which has not been decided, the decision which has been taken by all, matters which have been brought to the notice of the all, whether financial statements are prepared as per applicable financial reporting framework, whether the audit report is as per relevant statute. These are the areas where there will be a joint and several responsibility among all the joint auditors. Next. The management of PQ Limited changed during the period under audit. Mr. Govind, an auditor, at the time of receiving written representations on the management and responsibilities from the management, was in a dilemma related to the date and period covered by the written representation. So what should be the SA 580 once again? What should be the date and period covered by written representation? The date should be as close as possible to the auditor's report, but it should never go beyond the date of auditor's report. Why logic? Why? Because written representation are also audit evidence. So you have to get the audit evidence, then only you have to express your opinion. Reverse cannot happen. So that paragraph you have to write date and period of written representation. Further, new management was of the view that they can give written representations from the date they took over and not for the prior period when old management were managing the affairs of the company. So take for example, an auditor is conducting audit for the financial year 23-24. Now, somewhere in January 2024, the management changed. Board of directors have changed. So board of directors took charge from Jan 2024 till 31st of March 2024 also. For these 3 months, these are the board of directors. For the 9 months, the board of directors are different. Now, when the auditor asked the management to give the written representation, this new management is telling that we can give you written confirmations, written representation only from January to March. For the previous 9 months, we are not the board of directors. We will not give you written representation for the previous 9 months. Is it acceptable? No. Even the board of directors should give confirmation for all the period covered by the financial statements. So even this new management is required to give confirmation from 1st of April itself, not just from the date when they have taken the charge. Clear? So I suggest you to read this answer as well. Important. So I specifically ask you to read this answer also once. Next, knowledge of the client's business plays an important role in developing an overall audit strategy that is missing here. In fact, without adequate knowledge of the client's business, a proper audit is not possible, 100%. As per SA 315, identifying and assessing the risk of material misstatement through understanding of the entity and its environment, the auditor shall obtain an understanding of the relevant industry, regulatory, and other external factors, including the applicable financial reporting framework. Substantiate with the help of examples. See, they are asking you to write regarding only one thing. So you need to understand regarding multiple things. In that, one of the things which you need to obtain understanding is industry, regulatory, and other external factors. So what things you will try to understand regarding relevant industry, regulatory, and external factors? Like you will try to understand the things like what is the market, who are the competitors, whether entity is a seasonal business or a recurring business, and relevant regulatory factors like what is the regulatory environment, and also accounting principles, industry specific practices, and other external factors including applicable financial reporting framework and all. So this is also a straightforward question. Understood? So that's all guys. This is a summary discussion from MTP 1 and 2. So my request, please humbly go through this before you go for the examination. All the very best everybody. Take care. Bye. See you.